Welcome back to Data Dash. In today's video, we will be diving into the latest developments in the world of finance and cryptocurrency. From the recent stock market crash to the SEC's threat against crypto exchanges, there's a lot to unpack. We'll also be discussing the impact of Silvergate Capital Bank collapsing and what it means for the traditional financial system. So stay tuned for all of that and more. And as always, don't forget to like and subscribe to stay up to date on the latest trends and insights in the world of finance and crypto. Recently, the market has gone completely crazy. We have a lot of data, so let's start looking at it. A brief history of the stock market collapse. As a result, the Silicon Valley Bank failure led to the Dow Jones finishing more than 300 points down, marking the worst week since June of last year. The SEC has threatened to sue several cryptocurrency exchanges on the grounds that they do not meet the legal definition of custodian. Coinbase confirmed in an email we got today that they are still staking assets and explained that their revenue comes from the protocol verifying a particular blockchain or network rather than from Coinbase itself. Coinbase only deducts a little charge. It came as no surprise that JP Morgan also expressed pessimistic sentiments about cryptocurrency. The current consensus is that Ethereum is secure, but we disagree. We XRP holders are used to the fact that JP Morgan controls a sizable portion of the consensus infrastructure that monitors the Ethereum network. We hope Ethereum does very well. If the SEC goes after ETH, we will have a domino effect on many other projects, and we don't want that to happen. Bitcoin continues to represent 41% of the whole market cap, which is just shy of $1 trillion at $929 billion. Other cryptocurrencies would normally disconnect from these two in the face of regulatory clarity, but not yet. Along with the biggest bank in the tech startup ecosystem, the Silicon Valley Bank going under, we also had the collapse of Silvergate Capital Bank, the company that manages USDC, the stablecoin. This is obviously really important, so we'll just quickly go over it. Silvergate Capital, a large bank with roots in the established banking system, has taken a severe beating. It is not a cryptocurrency bank, but it has made numerous significant crypto wagers. They're having problems, and that's having an impact on the conventional financial system as a whole. Worse yet, hackers have been in the spotlight for attacking the Hedera main smart contract service code. Using this attack, they were able to steal tokens from the Hedera token service from the accounts of their victims. So, the cryptocurrency market lost about $70 billion in value in less than a day. In light of Bitcoin's recent decline of 8% below $20,000, we have just published a poll. We predicted a low for Bitcoin's price in 2022 at $15,500. Will it go lower than that? Because this vote is still open, it keeps changing. The majority of people believe that it does not break. Here we have the current Bitcoin price chart on the left and the Bitcoin price chart from the 2015 bear market on the right. Our $150 spring in the wick of accumulation diagram shows that we are wicked all the way down to that amount. This wasn't quite a double bottom, as we climbed back up after another drop. There was a higher low established before the trend started to rise, and we did not fall back to that level. Now we can use this wick to glance at some FIB retracements and compare them to the bear market's bottoming structure in 2015. Bitcoin's swing low has hit its target. We anticipate maintaining the current level and do not anticipate setting a new low. In the bear market of 2015, you may recall, we traded as high as the 618 Fibonacci retracement. We turned it down for a while, then returned below the 382 to get things moving again. We expect that we have not yet escaped the dungeon, but believe that each day brings us closer to doing so. We have no choice but to ride out the storm of terrible news. Thus, Bitcoin's 2016 retracement from its 2015 low to its current $618 level. Now let's examine the previous cycle at its low points in 2018 to 2019. Take note as we search for the Bitcoin bottom of 2019. This pattern here is reminiscent of the CSPR price chart. The Bitcoin price chart shows a 618 Fibonacci retracement after reaching these lows. In 2020, we experienced a complete pullback to prior Fibonacci retracement levels as well as prior lows, followed by a V-shaped comeback. We think that Bitcoin price chart is currently experimenting with a structure very similar to the bottoms in 2015 and 2019 before the subsequent surge to $236. The state of macroeconomics right now is frightening. We'll discuss whether or not we think it was intentionally created to drive retailers away. On the macro scale, we anticipate 28,000 at the 236 if Bitcoin retraces. The 382 can be seen at around 35,800, and as we recall, we hit the 618 here, and the 618 there before, which is almost equal to 48,000 BTC. After a long bear market, various bottoming structures have been examined. We think it's important to fill in those spaces up top and point out that 28,000 is another confluence with a 236 we've been emphasizing. Go to 28,000 and sign up for the beta test at casperwallet.io. We think they're releasing wallets for the next week last Sunday, and looking at the /statistics on casperstats.io, we can see that the number of Casper holders has increased from 102,000 to over 106,000. Over the past 24 hours, the number of transactions has increased by 25. We can see Tether, Silicon Valley Bank, and USDC on the charts, and we can't wait for the day when hashtags join them. Trending news: Gary Gensler has resigned. So, Anders is warning that things will become worse. This is the biggest bank failure since 2008, when Silicon Valley Bank failed. Something is amiss when a bank can fail so swiftly. The Silicon Valley Bank reported a loss of $1.8 billion, or nearly $2 billion, when it liquidated $21 billion worth of assets. In other Reuters news, the crypto exchange Gemini and the Winklevoss twins have parted ways with JP Morgan. The choice was made in the days following Silver Capital's when it comes to financing the cryptocurrency market. One of the most powerful lenders has expressed concern about its viability as a going concern. It's strange that JP Morgan would sever ties with a crypto exchange like Gemini, as reported in the story. JP Morgan declined to comment, but Gemini, the exchange, said on Twitter that its partnership with the bank is still strong. Hedera is the last thing on our list. We have Hedera, with more than 5 billion transactions on the mainnet. But the news didn't hit until day 2. As of right now, we know that attackers used this vulnerability in the Hedera mainnet service code to steal the victim's Hedera token service tokens and deposit them into their own accounts. The attacker thus focused on liquidity pool accounts used across several Uniswap version 2 dexes. The operators of the Hashport network bridge quickly noticed the attacker switching to tokens stolen in this way, and they took rapid measures to shut down the bridge. The Hedera community and teams therefore coordinated their efforts to learn more about this assailant. Hedera disabled their mainnet proxies so that the attacker couldn't grab any additional tokens. The mainnet is still active, but we have cut off access to it by disabling mainnet proxies. We've zeroed in on the source of the problem, and now we're trying to fix it. We think the future is bright, and we enjoy HBAR, but this seems like a rather centralized setup for the network. We must keep in mind that this is an enterprise DAO, and not only an improved version of the Bitcoin public network. Since we are optimistic about the future token price's response to utility and high volumes of transactions, widespread adoption within enterprises is of far greater interest to us. When the problem has been fixed, the Dara Council will sign transactions authorizing the deployment of the new code to mainnet. When this happens, the mainnet proxies will be activated again, and business as usual can resume. The Dara mainnet is currently operational and gaining consensus while we continue to look into the issue. Nothing has broken in the network. The network was unreachable because IP proxies were turned off. The Dara network has been protected by proxies since May 2020. The attacker can no longer have the stolen money, so money in a retail user's account is safe. Anyone concerned about the safety of their account cash could listen up if some of their H4 wallets are displaying a zero balance. Another friend of ours who uses the Descent wallet reports that he has a $0 balance. We're going to assume that once the proxies are activated again, everything will be okay and he'll be able to check his account balance as usual. On the other hand, thanks for tuning in for today's video here at Data Dash. We hope this information has been valuable in keeping you up to date with the latest in the cryptocurrency world. As always, we encourage you to do your own research and stay informed. Before you go, we have a question for you. What do you think will be the next big move in the crypto market? Leave your thoughts in the comments section below. Thanks again for watching. Make sure to hit the like, subscribe, and bell button to see more of our crypto tips and updates for you in the future.